Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Ed Cofrancesco, CEO of International Asset Advisory, for his 2021 outlook as stocks closed out a spectacular November and look to the new year. Ed, it's great to see you. Welcome to Trade Talks.
Well, thank you, Jill. Good afternoon.
And in November, the S&P 500 had its best November ever. The Dow notched its best month since 1987. And for those of us old enough, we see the irony in that year. And the Nasdaq comp had its best November since 2011. Do you think the party is over, or are stocks still undervalued, especially when you factor in low inflation, low interest rates, coupled with pent-up demand as we get to the other side of COVID-19?
That's a great question, Jill. So 8 or 9 months ago, when we were first entering COVID, we here at IAA, International Assets, predicted that we had already hit we had already gone down about 50% on the Dow at that point, we're not 50%, 33%, down to 20,000. We expected it to eventually get back up to 30,000 and hit an all-time high. But we thought it would be in steps. It would be 2 steps forward, 1 step back, 3 steps forward, 2 steps back, based on how we heard the COVID news come out and if things got worse. And of course, fortunately, it seemed to stabilize for several months. And so we've gotten up to this 30,000. At that time, we were looking for a market by the end of 21 of 35,000. We still think the fundamentals are there for 35,000. But of course, now as we've entered the winter, particularly in the northern states, we see that COVID cases are on the rise, deaths are on the rise again. So we think a lot depends on COVID. We think the underlying fundamentals are still very strong, but nobody can predict what's going to happen with COVID. We're all optimistic that we're going to start seeing vaccines hit this country in the next couple of months. I just read a report today that they're going to have 50 million vaccines ready in February. Everybody should have a vaccine available to them if they want it by April 1st. And that may very well be true, but we've seen a lot of starts and stops with COVID and how it's going to be addressed. Nobody can accurately predict. We can hope, and if those hopes are true, and if those optimistic reports are true, then yeah, we do see a Dow 35,000 and an S&P 500 of 4,200 by the end of next year is very possible, and we see continued strength, particularly in the Nasdaq stocks.
When do you think a stimulus bill may go through? We just heard this afternoon, of course, it's December 2nd, and the headlines come fast and furious. Things could change at any moment, that McConnell's looking to get a deal done by this weekend. What are your thoughts around that? Because at the end of the day, small business owners have to think about how they're going to survive to the other side of this.
We're reading reports of 33% of all small businesses in the United States have already closed down, and a large percentage of them won't reopen. We're hearing some in big cities like New York, the 33% have closed down permanently already. So that's a very good point. We need a stimulus. Is the stimulus, though, going to be full of fluff that really doesn't address the small business owners, or is it going to be something that's going to be available to everybody, particularly the small business owners?
Looking ahead, how do you think the new Biden administration's policies impact the market or certain sectors of it?
I think we're going to see a lot of more of the same. I don't think we're going to see radical policies that are going to significantly change the market anytime soon. I think that what we have is a small Democratic majority in the House. We don't know what the situation in the Senate is, but whether it's a small Republican majority or a small Democratic majority, it's going to be very, very small. It's going to be one vote or so either way. So I think that we're going to have to see a lot of bipartisanship on the House and in the Senate in order to get things done and deliver bills that the new administration will get behind and endorse. That being said, I think both parties are going to have an economic incentive to spend wildly on their favorite plans. Everybody wants to curry favor, with no party having a clear mandate. I think both parties are going to start spending wildly. And well, we certainly need more stimulus now. We're concerned about what that means in 2022 and 2023. Will the I word, which so many people who are listening to this probably haven't experienced in their investing lifetime. We haven't had real inflation in a long, long time in this country.
And let's wrap up with oil here, back over $40, one of the best performing sectors in November. But Ed, business travel still down significantly for the year, and we are facing more lockdowns over the winter. Do you think oil got a bit ahead of itself? The demand just isn't there yet.
Absolutely. I mean, do I wish I had taken all the oil I could have possibly when it was zero or negative? They were going to pay us. I had no place to keep it, of course. None of us did. But In the same token, your point is well made. I mean, travel is still not bad. Let's wave our magic wand and let's look at our crystal ball. And let's say we have our magic wand, and April 1st, COVID is no longer a real problem in the United States. Okay, that's a great hope, and let's just say that happens. When am I personally going to feel safe traveling the way we once did? I don't think it's going to be on April 2nd, that's for sure. And what about the cruise lines? I mean, we've seen a lot of cruise lines come back in the last couple of weeks. When are people going to feel safe to start taking cruises and so forth? I think you're looking at 22 before that happens. And I think it's 22 before we start really seeing travel pick up again. So yeah, I think that oil maybe has gotten in front of itself here.
Right. And just to add on there, one more point that I wanted to make, a big part which is impacting the travel and leisure industry, and of course the energy complex, is business travel. That's really the key to them making money, and it's down 90% for the year. And while it was relatively easy for us to pivot to go from the office to home early March, mid-March, we have to think about how it's going to be integrated back into the offices and at what level. You just can't have millions of people go back into the city. Are they going to start traveling for business again once the borders or people feel comfortable to go? It's not going to be something that's instantaneous.
Absolutely correct. And also, I think that business travel and all travel is going to be permanently changed as a result of this. Here we're communicating by Zoom call right now. And as most companies, we, of course, were remote for 2 months here in Florida, and we've learned that we don't need everybody in the office and that we can work through Zoom. And we've been having lots of Zoom meetings with clients and vendors and trade industry groups. You know, companies are going to start saying, do I really need to spend money on needless travel? Or people are just going to travel just for the heck of traveling in business? I think no. I think there's going to be a permanent change to our behavior. I think travel for leisure will pick up in 22 again, because people want to see their family, they want to see friends, they want to get out and about. But again, I think that's more like 22, when people have confidence that we do have COVID behind us.
Right. I mean, think about it this way. Do you really have to go to that monthly or quarterly client meeting? Can you do it throughout the quarters on Zoom and meet once a year instead of all that travel? Perhaps those in-person meetings will become even more meaningful if you're able to get one. So I would agree with you there. I think the landscape is going to change, certainly for the near term. Ed, it was great speaking with you. Thanks for joining us on Trade Talks.
Thank you very much, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.